Is the metals supercycle over? After a decade in which miners have enjoyed a boom, that is the question that investors and these attendees at the FT's Global Commodities Summit are asking. The debate here in Switzerland revolves around the fact that China's growth is slowing. The government is targeting 7.5% growth for this year, its lowest target in almost a decade. The impact on metals markets is profound. China accounts for more than 40% of global consumption of most metals and an enormous share of the growth in demand.
I think at the moment we're seeing a consolidation of the metals. There is clearly a slowing down of activity in China. We see that from the anecdotal information that we're getting from our customers. In saying that, it's a very mixed bag, and we see the underlying fundamentals being quite different between the metals in the non-ferrous sector. So we still believe that copper will be an outperformer. We're still very positive about zinc, neutral on nickel, and less positive about aluminium.
On the supply side, production of metals and minerals could soon rise significantly as the mining industry responds to recent record prices in commodities from copper to tin, iron ore and coal.
The growth in demand has outstripped supply, and that's really the issue. But the market, as always, will go back to equilibrium, and as you see right now, all of the large mining companies are going to be producing and increasing their production by hundreds of millions of tons of iron ore.
For many investors, the combination of weaker demand and stronger supply is a signal that lower prices are imminent. The price of copper, a sector bellwether, is down nearly 20% from last year's record high, and mining sector share prices have been hit even harder. But executives and hedge fund managers seem sanguine about the prospects for China's commodities demand. Although the rate of growth may be slowing, the world's most important metals consumer continues to build. And as the economy becomes larger, even a slower rate of growth translates into hundreds of thousands of extra tons of copper that must be produced to satisfy its needs.
I'm pretty comfortable that China will continue to grow for the next many years. Whether it grows at 10% a year or 8% a year, it's still enormous growth. The only major shift over the next 5 to 10 years will be, in our opinion, that from an investment-driven development, it will become a domestic consumer-driven economy. But that will not change the raw materials they'll need to import.
The supercycle may not be ending, but it appears to be entering a new, less explosive phase. One thing, however, is clear. Metals are still hot. Jack Farchi for the Financial Times.